It's all good. Yeah, it's all good. It is all good. And we're here today. Oh, jeez. All right. In 3, 2, 1, we are live. We're starting out strong with big old clap today. Welcome, friends. Boy, do we have a doozy today. It is going to get in depth. I don't know, as in depth as we can on the state of real estate and how we know it is forever going to change.
Dun, dun, dun.
What a statement. And I am here live with my wife and marketing guru, Sarah Abrams. Welcome.
Thank you.
You're here to keep me in line, as you always do. So thank you for being here, being
You're
present.
welcome. You're welcome.
Yes.
Thank you for having me.
Okay, so we got a hot one. This is the buzz in real estate. There was several lawsuits, 3 that I'm aware of, class action lawsuits. The largest one, the Sitzer-Burnett, it was filed in the state of Missouri, and it represented a group of home sellers against the NAR. The NAR is the National Association of Realtors. Okay. And it was against defendants also included Anywhere Real Estate, Berkshire Hathaway, Home Services, Keller Williams, and RE/MAX. So we got some heavy hitters that there was a class action lawsuit against. And what the plaintiffs alleged is that real estate commission rates are too high and that buyers' representatives are paid too much, and that the NAR's Code of Ethics and MLS handbook, along with the corporate defendants' practices, led to inflated commission rates. So that's a mouthful to kind of get out. But in the details, essentially as the system is now, is you have a listing agent that works with the seller of a home, and they negotiate the commissions. And from there, they advertise how much they're willing to pay to a buyer-represented agent on the other side. And that commission amount is listed and advertised in the MLS, which is the Metro List Service. Okay. So the MLS is an internal, there's many clients that have, or, just anybody has access, but it's limited. The biggest one is a pay service that realtors use to search homes to show their buyers, right? And it has like internal comments, careful of the dog in the backyard, here's where the key is. And it has, again, the commission terms listed. This has been the system, my understanding, since the early 90s when there was the previous mix-up. And Sarah, you read a little bit about that. What did you have much on
Yeah,
that?
I don't have all the details, and I'm sure there's someone way more well-versed, but it had to do with like federally, a group, I don't recall the group, but federally they did a study and they found that buyers in general felt that they weren't represented, like they didn't know that they were being represented by anyone. And so then it just kind of had this unfair advantage in their mind frame, I guess. So then the states all kind of came together and created what we know now is like the buyer's agency. So like now you have listing agents and buyer's agents. And so there's
Sure.
the representation on both sides. They're being equally represented if you choose to have your own agent. And that came about in the early 90s.
Yeah. In selling your home, there's listing agreements, and that's something that they sign. And more as we get into real estate, just a reminder, in California and nationwide, different agreements, you can have oral agreements. Because real estate is so pertinent to the details, everything must be in writing. And so obviously, if you're an agent going to represent the seller, you need to have a listing agreement, and what are your services and what are your commissions and, all of that. And also, as there's different types, and again, I don't have them all here, but there's exclusive listings. There's where only you can list it and sell it. As a buyer, there's also a buyer's agreement that you have, that you're contracting with the realtor to represent you as a buyer, and those have been important. But I think, and just being honest, kind of what I see is there's been a lot of lackadaisical on the buying side. It's tough to get a buyer, tough to get a buyer qualified, tough to get a buyer qualified that wants to work with you, various reasons that you don't want to scare them and come on too strong too soon. And so, without having a property identified, I know that there's a lot of times that, realtors are a little nervous to get that buyer representation form signed. And I think now more than ever, it's going to be mandatory, right?
So before, it wasn't mandatory to have that in place. I think it's kind of my understanding what I've been looking at. It's suggested, it's highly recommended, or is it actually required?
And I believe it is. And I don't want to get too much on the weeds here of what we don't know. And this is my whole purpose is there's so much buzz in the media right now about this, so much in the industry, news and speculation, because this is going to cause quite a shakeup, and I'll get into that. So what I want to try to stick to, the majority, is the facts. What do we know? Okay. So we have a chair, the chairman of American Pacific Mortgage is, very active in the real estate world. And he was just in Washington, D.C. on another matter for the bill with the trigger leads. We've spoken about that on this podcast previously. It's a very good bill, and this is what we want, where if you apply for credit, you shouldn't get bombarded with 50 external calls that you didn't ask for, right? And so they're called trigger leads. When you shop around for a mortgage, that is specific, that they can see that you're looking for a mortgage. Mortgage companies start calling you, right? Because the bureaus sell that information as a hot lead, a trigger lead. Well, our chairman, again, Bill Lohman, was in Washington, and so they had meetings. Some of the attorneys that are working on this case came out, and so I've done my diligence in reading what I can, but he also kind of updated us as a company yesterday, and so here's what it is the listing agent's compensation is going to change. And that is, whereas they cannot just have an assumed compensation, they still can be paid their commission by the seller, like it historically has been. At the same time, it could be paid for by the buyer, but it can be and must be negotiated and in writing before the realtor starts showing the client homes. Is that correct, Sarah?
I believe so. So it was a simple sentence, and it was before the buyer's agent takes a potential client to an open house or to see a home, they now have to have in writing that they're going to represent them. It doesn't go into detail what that means.
Sure.
But that's what it says.
Okay. Well, the Missouri case has tentatively been settled. We'll call it a preliminary approved, where the real estate companies and everything, instead of taking this to full court and understanding at a certain point that they're going to lose, they've just settled with this with a pretty enormous payout. Lots of millions of dollars that they have to repay, but also the biggest thing, and this is where I believe the settlement amount, it still needs final approval with a judicial panel. Now, I've read and watched lots of YouTube videos, and a lot of people are saying this is a done deal. What we are seeing as a done deal, and the source that we have is, again, our chairman that was just in Washington, but also going to the NAR's website under the news section. It has obviously lots of different news in the industry, but they have some details and FAQs specifically about this case. And so the compensation rules are changing for sure and set to go into effect in mid-July. What I believe to be pending is just the final payout amounts and some of those terms. So anyways, here's the bottom line. Even if this gets extended, I ultimately feel that the industry is forever changing, and this is where it's going. Now, I think it's definitely broadsided the realtor world, and there's all kinds of buzz in that. It's already difficult with the struggling housing economy, with the rate environment, the limited inventory. We've seen a reduction in realtors. We've seen a reduction in lenders. And so this is only furthermore going to, I think, complicate and further weed out additional realtors, right? And why is that? And so we can kind of go through this a little bit more into the details of what I see is going to shake out, and I'm just going to say, traditionally, how's it gone since the 1990s? On the highest and best case, we see where the seller and the listing agent negotiate to sell the home, and commission is represented for both the buying and selling agent. Again, on the high side, let's say 6%, okay? The listing agent then can split up that commission and offer to the buying agent any amount of that they want, whether it's 1.5%, whether it's 3%, whatever. That is and has been negotiable, but it's really kind of with the listing agent for the most part. And I'm going to say in practice. Now, maybe they could go back to the seller. I'm just saying what I see in practice, right? So what some seem to be unfair is that the buyer's commission is negotiated by the listing side. And what may seem also unfair is that the seller is paying all of the commissions for the sale, for the purchase of that home. To me, it always worked, for the most part, in majority of cases, in full circle, where this time you're a buyer, next time you're a seller, then you're a buyer, then you're a seller. It kind of flip-flops back and forth. And we have to kind of think about that. Why is that the case? Is if you're a buyer, you're coming up with your down payment, and especially if you're a first-time home buyer, that may be years of savings,
Right.
Down payment assistance loans. It's your first home. It's the first time that you're really putting some skin in the game, and it takes a lot of work that first go around, right? So you're coming up with your principal down payment, whether that's 10% or 20%. In addition, you're paying your closing costs. And the buyer, for the most part, now this is different in different regions, in different states. What is customary, a lot of it is by region. I'm going to speak for California. Most of the closing costs are paid for by the buyer. What is mutually paid for and mutually beneficial is the escrow fee, and then the seller typically pays, the county transfer tax and the owner's title policy. They've got, maybe $3,000 to $5,000 of fees. Obviously, a lot of these are scaled by sales price, whereas the buyer would have probably $8,000, $10,000 of closing costs plus their prepaids. And so if you're trying to add up their cash to close, let's go with a modest 5% plus another 3% in closing costs. They're coming up with 8%. And then now the concern is, are they going to have to come up with the commissions to hire their own representation.
Right.
Yeah. And so this is the reality that they can, but it also kind of poses a lot of different, I'm going to say, concerns. With the new ruling, I have more questions of how the shakeout is really going to kind of play out over the next year, over the next 5 years. And so it's something Greg, you're talking to yourself, but at the same time, please listen to this in a few years, because I want to, I'm speculating right now into the future, the issues that I foresee. I want to see how real these come to fruition.
Right.
And so, one, I think the cash to close is going to be a larger burden on the buyer, number one, as a proposed issue. Number two, we have in lending what they call interested party contributions. And there's closing costs, and then there's also interested party contributions. Essentially, the government puts caps and maxes on all of the fees that are allowed to be paid, and also by who can pay them. So that way it's not an influence, or that you're overpaying and you're considered a predatory lender. Mm-hmm. There's a lot of safeguards that have gone into the calculations and what fees are inclusive of that. And so again, from our chairman, FHFA, the Federal Housing Finance Authority, that oversees the agencies being Fannie Mae and Freddie Mac for conventional loans, is not ready to analyze this. Supposedly, they want to wait and see how the court cases finalize before they analyze this. And that, to me, is kind of the backseat approach that isn't great, right? So all of a sudden, this is going to go live and the court cases are going to be settled.
It's going to be a scramble.
And then there's going to be a scramble, you're right, of, oh my gosh, we can't even get financing for this because now this is too much of interested party contributions. And what is that, for example, is a lot of times like it's based upon loan to value, it's based upon program. But let me just give you an example is, the seller can give a credit, and we can just say a credit, and it applies towards, first and foremost, the closing costs. And a lot of times they put a cap on that based upon, again, loan to value. So at 3% down, you might have a cap of 3%. With 20% down, that might grow to 6%, right? Mm-hmm. And so what if you exceed 3% contribution, right? Well, you have a 3% seller commission, but then you also want 3% for your closing costs. So you're going to ask for 6%, but the max allowable is 3%. They're suggesting a cap because they feel like there's so much incentives from the seller that you should just lower the sales price. And so that's why there's supposed caps on that. The second part of that, which goes into fees that are charged to the consumer, the borrower can pay commissions. It just gets really complicated. So again, getting back on track here is the guidelines. Now, conventional is taking a standstill. Thankfully, the government loans, government being FHA and VA, I have read articles on both of those where they're already going to work to analyze how do they get this to work. They need to come up with some solutions.
Yeah, I had heard that about the VA.
And VA is good because they're an amazing loan, but they're very quirky. There's even a list of specific fees that the veteran, they don't consider them the borrower, it's the veteran, cannot pay. And so, I'd love to see, and again, for the most part, VA is pretty hip where if it benefits the veteran, they're going to be all for it. I mean, They even allow a seller to pay off a veteran's credit card to help them qualify. So I know they're going to be proactive and very open with this, which is great. It's just a matter of getting these guidelines going. Right. So we have got further issues, right? If we read along into this where, okay, I think what's going to happen is we're going to roll out this July, mid-July. We're going to see the industry try to kind of continue status quo. This is the way that we've been doing it, but we cannot advertise how much we're going to pay the buyer's agent. Fine. Informally, we know that's going to be somewhere between hopefully 2 and 3%. So as you submit your offer, you're going to request that. And I think it's going to be a status quo of, yes, this is expected that it's going to come along. And I think that's going to work for a while until Johnny Undercutter Realtor comes along and tries to undercut everybody. And I think that's where it's going to just go haywire. And what do I mean by that is, again, you negotiate with your buyer how much the sales commission is. You ask for 3%, they settle at 2.25%. Okay, so there's direct negotiations that are going on. And then you've got this other buyer's agent that comes in and says, look, just give me a flat fee, $5,000, and I'll represent you as a buyer. And then the seller and the listing agent has 4 offers on a home. 3 are the status quo of the seller contributing something towards, historical type of commissions. And then you've got the 4th offer where the seller doesn't have to pay a commission. It's them, the buyer, paying that directly to the buyer's agent. And essentially the seller wins, right? Because they will net more out of that because this one guy came along and undercut everybody. And I think we're going to see some of that. And I think that's going to disrupt the system. I do see that. I heavily foresee that. Because negotiations are now on the table in the forefront, in the past, they have been there, and I'm just going to be devil's advocate, if I can say it. They've always been there. But again, when they're listed at, 2.5%, it's very rarely that the buyer's agent comes in and says, no, I want 3, or, hey, I'm willing to accept 2. What's listed is pretty much what they're going to get. Right.
Yeah, right.
And so now that this is forefront and in front of you and just heavy negotiations, I believe a lot of those commissions are going to be negotiated further and reduced.
Yeah.
And, I read an article as soon as this ruling came out, every real estate company, their stock prices dropped, somewhere between 3 and 16%, because it is understood that competition is good, but competition regulates prices, and it's going to reduce how much they're paid, right? And so this is the concern. The average realtor, and this is nationwide, the average realtor makes $40,000 a year. Well, you just got a pay cut.
Right.
Now, what do you make? $30,000 a year for the average, and that's just unfortunately the reality, and that's why I'm foreseeing some of this going by the wayside. Now, in lieu of this, and again, further complications that I'm foreseeing, in lieu of hiring your own buyer's agent, borrowers, especially new borrowers that aren't as well versed in real estate, are going to be a lot more enticed to go directly to the listing agent. And I see this sometimes. It's called dual agency, where they represent both the buyer and the seller. It is legal. It's allowable by DRE and by all of the ethics committees, as long as you give your fiduciary responsibility to all parties. And what does that mean? That means you got to be fair. Well, if you're the middleman, what's the best way to be fair? Is you split everything 50-50.
Cut it down the middle. Yeah.
Right. And so if I'm hiring a buyer's agent and there's a termite inspection with $5,000 of damages, I want my representation to go to bat and say, hey, we want you to pay all of this. And so, having your own representation, to me, is the best for the consumer, and having your own representation for the seller is the best for the seller. And you think about this. Anybody that goes to court, have you ever seen an attorney that is counsel and hired by the plaintiff and the defendant?
Well, no, for two reasons. One, why would you do that? And two, it's not legal. So it's interesting that in this scenario in real estate, that
Yes.
a realtor can represent both parties. It is interesting.
It is very interesting. Many realtors do it, and it's allowable. It's going to continue to be allowable. For consumers, for buyers that I work with, and I work with buyers, right, as a lender, I always want them to be properly educated and represented well. Everything's good until it's not.
Sure.
And I have personally seen that. And there's actually, as I'm speaking right now, there's a case a few months ago where I had that, and it was a first-time buyer, and I recommended to her to get her own counsel, a realtor. Hey, I'm still in court, right? She did not. And at the end of the transaction, things went a little south. She still purchased the home. She still liked the home. She doesn't feel that she was properly represented. And she said, Greg, I wish I would have listened to you. Yeah. And I don't want her to come to me and say that. I tried, and that's all I can do is just drop it in her
Give
ear.
your
of
recommendation.
Here's
and
my
let them
recommendation.
decide.
Exactly. At the end of the day, everybody, please make your own decisions based upon what's best for you at the given time. But that is an example just within the last few months that I've had that just came to mind as we're speaking here.
Yeah.
So as we get into this dual agency, we pose these issues that may arise, and you may not get the best representation. I'm not trying to say there's bad realtors. There's amazing realtors out there that can do the best they can with every situation. There's some poor realtors out there. I'm just speaking in general. It's always great to have somebody that you can rely upon, that you can trust, that in good efforts is representing your wishes.
Yeah.
And, sometimes I've had it too where borrowers, clients, their wishes are a little outlandish, and sometimes you have to tell them. And as being a professional that represents them, you can tell them, you should tell them. But I know at the end of the day, if they're asking for X, you need to ask for X. So anyways, we all know what's good and bad. And I think it's just doing the best that we all can to represent our clients in this. So the long and the short of it is every which way that we turn in this compensation for the buyer's agent, I run into some snafus or hangups where we're going to have some challenges in the industry. And I'm highly concerned with that. I believe, and I think, looking at court proceedings, you have to just look at what's the evidence in front of you and the specifics, but I don't think they looked enough at the ramifications of kind of the fallout. If this goes through, is there a better system? Is there not a better system? What's going to be a result of this if this plays out? And, compensation reform happens, and I feel like in the best interest of the consumers. For lenders, I've been in the lending industry for 24 years. Looking back, it was, we could set our own commission, when I started the industry. And to an extent, right? You can't just charge somebody 10%, right? But I feel like maybe that falls very in line with realtors. Like, hey, somewhere between 1% and 3%, we're going to charge you a commission, and that's fair for the work that we're doing. There's work involved. There's cost involved in listing your home. There's cost involved in, a buyer agent representing. You have to drive around. You have, different material costs. There's cost, plus you're providing a service that you should be compensated for. As comp reform came about, it changed it where we had to get paid the same amount regardless of the different types of programs and loans. There's some caveats to that, but basically it regulated that you couldn't charge 3% on one and then 1% on the next. It had to be fair for all. And I get that. There's bad apples that ruin it for all of us in a lot of things in society. And so it reformed it, but it also went where each time we've had these comp reforms in the lending industry, it has resulted somewhat in a pay cut. And where, again, we originally charged an origination fee somewhere between 1 and we'll say 3%. Now it's very rare. There's specific programs that charge origination fees that are program specific. But now the only lender fee that you pay is a flat fee, like an underwriting and a processing fee. And all lenders pretty much adopted to that system. And so it's, again, I'm, taking the history lesson from lenders of how these commissions were up front. And then now, hey, we still get paid, but it's a flat fee that the lender typically pays us. And it's, all as a result of this.
Right.
So I don't know, Sarah, there's a lot to see what's going to happen with this. Again, Bill Lohman, our chairman, he said same type of thing, that you're going to see a lot of flat fee compensation, a la carte fees, right? So, hey, I'll represent you for $5,000, but if I've got to do this, here's how much to add on. That kind of makes sense. He also predicts more of the dual agency, which I do too.
Yeah.
Please just proceed cautiously with that. And then we may even see, and I don't even know, dual agency with a realtor and a loan officer. And, my wheels are turning here. And believe me, I've always stayed in my lane. Most people don't even know this, that I do have my real estate license, because when I started lending, that was the license that you had to obtain. And so, I worked hard for that. And so I maintained that license, and I've never charged a commission for it. Right. So now I'm thinking, hey, if I have somebody that's adamant about not hiring their own agent because of the commission, is it something I do an a la carte fee for $1,000, $1,500? I don't know, that I can submit their offer, not full service, but at least, provide an a la carte type service. Believe me, I want to stay in my own lane. I love what I do as lending. I'm just providing more speculation.
Well, and services,
Yeah.
maybe. I mean, because that was the question I was going to say or ask you, is like, what are they saying? They're saying that they're anticipating more dual agency, but like, are they anticipating people going their own route and trying to represent themselves?
Well, I don't think you would get that. That's where they would go. And in lieu of representing themselves, they would either hire the seller's agent, the listing agent, or they would find somebody at a discounted, a la carte type premium.
Right.
Especially if the buyer has to pay it, for a first-time home buyer, that's the biggest thing that I'm concerned. And, let's go back to that. Another bullet point, I should have listed these, from 1 to 100 here, is, we want to promote home ownership, and down payment assistance programs are in place where, let's go back 50 years, you had to have 20% down, right? It was high risk, and it still is. Statistically, the less money you put down, the higher the risk. But then there was a thing called mortgage insurance, or PMI, that came out and said, hey, Mr. Borrower, we want to sell you a home, and if you're willing to mitigate the risk, if you're willing to pay this insurance policy that protects us, the lender, yeah, we're willing to give you a loan. And so it was kind of like, hey, a beautiful marriage here, where it promoted home ownership and it helped borrowers that could qualify otherwise with the ability to repay. Their income was good, their credit was good, they just lacked the down payment. So rather than waiting another 3-5 years to save up, they can get in now and start building equity now. And so We have these down payment assistance programs. They're pretty common where, again, even with a low down payment of 3% or 3.5%, we have these down payment assistance to fill the bucket to get home buyers into a home. But if we're working backwards here, instead of 3% that they need to come in with, now they need 6% to come in with. That's counterintuitive to promoting home ownership, and I think that's going to set a lot of buyers backwards on their time frame and their ability to get into a home. And I think that's one of the main objectives of home ownership is getting you into the home. Yeah. And there's a lot of concern there just with the added expense. I'm not saying I love the old system, but looking at all of these concerns, the old system was definitely looking a lot better of how it worked. But it is what it is. And you know what? Out of all of this, again, the lending industry has adapted. The realtors, the real estate industry, they too will adapt. So instead of being Debbie Downers of, this shouldn't go through, my understanding is it is going in July in practice. That the concepts, what NAR says is that essentially the practice changes are going through. Here's what their bullet point says. Practice changes. We were able to retain the right of consumers to continue to have cooperative compensation as an option so long as they pursue it off MLS through negotiation and consultation with real estate professionals. NAR has agreed to put in place a new rule prohibiting offers of compensation on the MLS. The change will go into effect in mid-July 2024. It's here. It's going to be here before we know it. I think the biggest thing is reading up as much as you can, reading up on the NAR directly,
I was going to say,
consulting with realtors to see how their company, how they personally are adapting to this. And, it's always good to shop around lenders. It's always great to shop around with realtors. And, as much as we love one, how are they charging? How are they, handling this? It's good to get a second opinion of how others are also handling it, because this is going to be new for all of us.
Well, and when you're encouraging people to go and research and read up on it, finding the correct sources is important, because you can type this in and there's 100 pages on Google of, news stories and whatever it is. And they can be misleading. They can be misunderstood, whatever it is. So the most helpful information I found was directly on the NAR website. So,
yes, as have I.
Yeah.
So NAR website is, again, our recommendation to go to for the most up-to-date information. There's a lot of YouTube videos. We're going to be one of those. We do have speculation of down the road how it's going to play out, but the facts that we're trying to give of what is being played out and when, those are factual.
Yep.
Okay, did I miss anything else for our listeners?
No.
Have a great day, people. We love you. Thank you for listening to your favorite podcast, G Money, Everything Loans and Real Estate, NAR. It's a big deal, and we out. Thank you.